Hi guys, today welcome back. Today we're going to be talking about gold. We've been discussing about gold, and today is also another series of talking about gold because we actually took a nice buy. I mean, a very wonderful buy yesterday on gold. So I just want to make the video explaining why and how we analyze it. Real-time analysis. I even sent it to the group. Real-time analysis, and we took the buy. So let's get to it. So we are going to be using a couple of tools. From what you can see here, this is the first tool we are going to be analyzing. Then we'll move to other tools to check the commercial sentiment, the market maker sentiment, the dealers, and other things like that. But looking at this very first tool, what do you see? You're going to notice that the gold has been bearish for a very long time, right? How do we know it's going to reverse? And are we able to get our entry right here? You can see the entry right here. Don't worry, I'm going to show you the full screen in short. So how are we able to get the best entry right here? I know it's not the best entry. This will have been the best entry, okay? But this is still very good, all right? This is still very good. So I'll be able to get this good entry right here on gold. That is the thing that I'm going to explain. So the first thing is, when gold was being bearish here, we could see that a lot of people were taking profit here. All right. So if you look at this, you're going to see a number of 1,410. All right. You see 1,410, and you see the P 1,820. This means that a lot of people were taking profit at this area here. They're taking profit. So when we saw that, we knew that when big guys are taking profits, there is nothing left again. The next thing is just what? Accumulation. That is the next. So you just need to prepare for a very good turn, a very good change. All right. So we prepare for that. So we saw the accumulation, the phase one, the phase two, and the phase three. And if you look at this, all these three phases, you will also notice that they were also taking profit here, and they took the last profit here. And we saw the dealers being bullish, especially on the last phase. We saw the dealers are very, very bullish. All right. So when we saw that, we knew that something is actually going to happen. Then we waited for this last candle to appear. So when the last candle appeared, it took a bunch of liquidity, and we saw some profit taking around here too. Then when we saw this, we quickly enter at the next candle. All right, we quickly enter at the next candle, and you see that as soon as we enter, the price keeps on moving. Don't worry, I'm going to show you from the commercial perspective. All right. So if you look at the entry too is somewhere around here, because a lot of people ask me, how did you get the entry? So the entry is around here. All right. Though you cannot use this tool only, all right, you need to add some other basic knowledge to it and some professional knowledge to it, okay? But this is one aspect. Let me go to another aspect, all right? Here, we need to know what the market maker, what the commercials are actually thinking. So now, how do we get that? We need to check what inflation is doing, since we are talking about gold. So this is a 15 minutes time frame. So this is a reverse inflation value line. All right, a reverse inflation value line. It has been reversed. So it tells us that it's possibly correlated with gold. So it tells us the direction of gold, because it's going to move before gold. That is the work. It must move before gold. All right. You can see all the way down here, it has been bearish. That means we can't buy gold. Even if we are seeing all these dojis, a lot of people will have been buying gold here. All these candles here, they will be buying gold here. But why did we buy here? Because when we saw this, we knew that they started moving the inflation value line. They started moving it up. They started the rotation up. All right. So when they started the rotation, we just prepare for the liquidity ons and what we entered. All right. So we saw them taking profits, and we waited for this rotation. So this rotation is very, very important, because without this rotation, we wouldn't have gotten the nice entry around here. All right. So I'm going to show you another one. So this is another value line. This is a general risk in the market. So it tells us the general risk scenario in the market. So when we look at this, we see that the risk has been turned. All right, it has been turned off. So in this situation, this is a risk of situation. It's not a risk on, it's a risk of situation since we are dealing with gold. All right, so this is a risk of situation. So when we saw this, we knew that something is actually going to happen around here. You will notice that I marked this area here before. So there is a line that has been drawn from the past, so that I marked around here. You will also notice that I marked there. All right, I'm going to show you the reason why. So I marked there. So when I saw there is a risk off scenario coming up, I was looking at this is actually getting ready. So I'm actually getting ready for a buy. All right. So the risk off rather is very, very okay. This is another one. This is a general commodity risk. It's different from the general risk. All right. So this one tells us what the commodity are doing, like gold, like silver, like platinum, all the commodity, like what are they doing? Are they going to be bullish? Are they going to be bearish? It's different from the Forex, it's different from the equities. All right. So this risk value line is specially for the commodities. All right. So since gold is one of it, that is why we are also using it. And as you can see that it started making higher highs in, and you can see a very nice divergence. It has been making higher highs. So the commercials are the one that push up all these things. You understand? So they push up all these things and they give us a note like, guys, be prepared for it. Only if you know what you are doing. All right. If you are able to analyze it like this, you will know that gold is already discounted. There is nothing left of it except buying. There is nothing left of it except buying. So we knew that since the commodity risk has gone up, there is nothing left there. Gold needs to go up, and that is the reason why gold also went up. I'm going to put the 3 there so that you are going to see that it's not one line that I'm trying to put together or manipulate. It's just 3 different value lines. All right. All right, so these are the 3 lines. As you can see, they are the 3 value lines. They are not moving average. All right, mind you, because a moving average is derived from the price. You understand? It's lagging, but this one is not lagging at all. As you can see, it's actually telling us the direction. It has gone forward before the market actually go forward, and that is the reason why we are using it. We don't want something that will just be telling us the aftermath. We want something that will tell us what is actually going to happen. And if you look at all these 3 value lines, they've already gone up first before the price now went up. Gold just did the lower low, and all these 3 lines need higher lows and higher highs. All right, so this is a very, very big advantage to us as institutional trader, and we use this to get knowledge on what is going to happen on all these currencies and commodity and equities. We're able to analyze it using it and other tools to bring about a very good analysis and a very good entry. So we're able to get the entry here. Another thing that we did was the measured move. I'm not going to do that here now. So we did the measured move. The measured move also gave us the exact area that is going to return. Though there is one special liquidity down here, but they just managed to escape that, and they use this and because they see it fits. So even if you miss this is a re-entry because the price have closed above all these sellers here. As you can see, all the sellers that came here, this price closes above it, and there is a retracement for a very good entry. And as you can see, if you have entered here, you will have made a whole lot of money on gold. All right. So that is that about that, guys. Let me show you the real charts. Okay. So as you can see, this was our entry, and we are still holding it. All right, we are still holding it. We are going to take some profits. We're going to take some profits very, very soon because it's getting to a place where we are going to see some little retracement. All right, so we are going to take some profits. As you can see, we have 1 and 2 lot size mixed together. So this is a total of 35,353 points, which is 353 pips. All right. So this is a lot of fun. It is a lot of cash. All right. If you are able to analyze, knowing the accumulation points and knowing where the price is going to actually reject, know when the commercials are done, what the market makers are doing, what the dealers are doing, and where they are taking profits. Knowing all these things will put you in a very good advantage, and you're able to analyze the market professionally like the institution guys do analyze. So thank you guys. Thanks for watching the video. Make sure you subscribe. Bye.